Hi everybody, very good morning. In this video we'll be discussing about the pre-open market movements for the expiry day, that is on 16th of December 2021. So we'll start with the bank nifty. So what was the movement yesterday? Based on that we can predict the market movements. Instead of the future chart we can refer the option chain data. First we'll briefly summarize about the bank nifty future chart. So as you could see on the screen, this was yesterday's 15th December chart. So completely yesterday it was a premium killing day, we can say. Instead of happening expiry and today, that is on Thursday, Wednesday itself, we can consider that it was expiry day, because that much decay of the premiums were happening until unless after 2:30 there was a bit rally here. So except this, it was completely, what I can say, decay of the premiums. Coming to the option chain data, before going discussion about the completely this complete market. Yeah, this is the market option chain data, that is of the expiry of 16th December 2021. So we could see here, these are the spot prices, this is the spot price, and these are the strike prices for the bank nifty index. As you could see already, it has reached out of the money premiums have reached 222 and then 177 here. Tomorrow if the spot price is reaching the same number even after the expiry also, that is at 3:30, tomorrow means that is today on expiry day, after completion of the trading hours, if the premium spot price premium is the same amount, then these premiums will become zero. 222 and then 177, all the premiums above this and below this left side and above this right side will become zero, because these are called the out of the money contracts. They will become zero when on expiry day, that is on Thursday. So considering that in mind, and if you are option buyer, option trader, that is a buyer, then always wait for the trend creation in the chart and then enter the with the strike price which is near to the spot price. Don't select the spot price which is quite far from the spot price, because if you select the strike prices which are far from the strike prices, then the expectation of the movement in the strike prices which are far from the spot prices will be very low as compared to the nearer ones. Because if you are option buyer, you can expect if you have a rally either on buy side or sell side, then easily you can go with the trend creation and the respective capital which is defined on the option chain data. Coming to the nifty is quite good as compared to the bank nifty yesterday. It was not that much volatility, but somewhat like 100 points movement in one side and then 50 points again in one side and then one more side rally, and then 1 to 2, 2 to 3, 3 to 4, 4 to 0 to 1, 1 to 2, 2 to 3, 3 to 4, 4 to 5. So the completely 5 kind of cycles will happen on each day. So if there is no rally happening, so considering that in mind, you can see the option chain data of the nifty as well. Yeah, this is the option chain data. So premiums which are out of the money are already reached 60 rupees. If you are option seller, then you can go and sell the price premiums which are far from the nifty spot prices. If you are a buyer, then always wait for the trend to be created in the intraday. Don't always carry forward your buying positions to the next day, because don't expect always the trend to be happening in your own direction which you are thinking of. Don't expect in that manner. Always rely on, if you are having a big capital with a minimum of 10 lakh capital, then you can go for the selection of the some premiums which are quite far from the spot prices, and then you can sell those premiums. See, for example, if you want me to suggest, these are the strike prices, that is 25 and 26. These premium strike prices you can sell on in position, or even on intraday whenever the market opens. If it doesn't open with any gap up or gap down, then you can go for selling these two. If it opens, then you have to select the strike prices which are quite far from the spot prices. Similarly, coming to the stocks, we want to discuss about the stocks. Then cipla was having very bad moment yesterday. There was not much good moment, but if you are an equity trader, then you can easily book some good points, good moments on intraday. Something around some 10 points, not even 10 points, 5 to 6 points. That is, if you have around 100 quantity of selling whole intraday with the margin using facility, then you can easily book somewhere around 5 to 600 rupees as a beginner. Coming to the option chain data of the same thing, completely see, if you see both the sides, out of the many premiums, here also there is a premium decay, that is 20.42 minus 0.055. That means it has made a low of 0.55 from the previous closure. If you consider the same thing around 890 P, 16.7, so it has made, but intraday it has made a bit lower than the here, because always sideways market will be having a very volatility. In that scenario, we can expect option seller, but option seller needs a huge capital. If you are intraday seller, then always sell in the opposite of the trend. If you are option seller, if you are a direct seller or based on the future chart you are seller, then you can go and sell the premium when it gives the indicator. That means this is the indicator you can see on the screen, moving average of 15 periods. When it gives indicator, then you can go for the selling. You can give 10 points here, and then again 15 more points in this trade. So something around like 5, 6, 10, 5 points, 10 points, 15 points easily you can book and then re-enter. Else, because if you don't book and re-enter, then you will lose. See, for example, if you don't book here, then you will lose these 5 points also. Such kind of scenarios will come always in the market on daily basis, not only one day. Coming to the HDFC chart, this is chart yesterday it has given a good movement on both the sides, but when a down rally happens or any rally happens, the number of points given in that rally will not be equal to the reverse of the rally, because it will be exactly half of the points will be given in the reversal. That means here how many points it has given, from 60 to 30. So what you can expect here is 15 points, 15 to 20 points reversal. That means from 30 to 50 it has entered the reversal. From 50 again it reached the 2730 as the premium, you can say. So in this way you can enter the trade. If you want to see the option chain data of the same thing, the side there was a little bit up movements happened. See, you could see here 2720 had made 10 points above, above the previous closure, and minus 12 points from the below the for the CE side, or that is for the out of the money. So if you are option seller on intraday, you can sell for the opposite of the trend, and if you are option buyer with very little capital, always trade with the strict stop losses of either 10 or 5 points on based on your risk involvement. Don't forget today that is today is expiry day. So don't forget to keep an eye on Nifty and banknifty chart. Whenever gives opportunity, then always enter the trade and then exist with very decent profits and then come out of the trade. Hope this has given a good information. Thank you for watching this video.